Good morning everyone. This is Abid Khan and you are watching Karachians Academy YouTube channel. We have started a series of videos on past paper solutions and today we have selected IGCSE past papers. CIE IGCSE past paper of accounting, multiple choice question, the paper based on multiple choice questions, paper 0452, it's paper 1 and its version 2. We have selected latest attempt of May-June 2022. In our last video we have done till question 6. So now we will start question number 7. So move on to question number 7. This is question number 7. It says, what is an example of compensating error? So compensating error is what which does not affect the balancing of your trial balance. Debit side and credit side of the trial balance remains as is means which is tallied and which is same. So no difference in the balances. So the compensating errors are those which on one side you are overstating an expense or revenue, on the other side you are understating the same. So the net impact remains have no impact on the trial balance. So those are called the compensating error. So let's see what the options are given to us. Payment of office equipment repairs. Office equipment repairs was debited to the office equipment account. So this is your expense and this is your non-current asset. So this is basically again this will not affect the balancing of trial balance because you are recording it quite good. But what the expense you are treating an asset. So this is a error of principle. This is not a compensating error. A purchase of goods from C. Jones. You buy it from C. Jones, the purchase is debit and you were to credit C. Jones, was credited to another creditor was there whose name was C. Jones. So there was some spelling difference, but they both were the different name and they were the different your creditors, suppliers. So you have recorded with the other name, means no, there is no impact on the trial balance. But meanwhile, none of is compensating another one. You are missing one and you are recording one. So you have to correct that. So again, this is not a compensating error, right? The sale of goods 65 to A. Aziz was entered in the books as 56. So this is a transposition error. Transposition error. Again, this is not a compensating error. The wages account was undercast. So your wages, you undercast them by 100. So your wages were reduced, which is a debit balance. So your trial balance should get reduced, means this should not be matched. But on the other side, the rent account, which is also your expense, so was overcasted. So on one side you undercast one balance and the difference was nullified or compensated by increase in another expense. So this is your option D. This is the example of compensating error. Move on to question D. Question 8. After the preparation of Abdul's draft financial statement, 2 errors were discovered. Number 1 error, the purchase of a machine. So you are purchasing a machine and non-current asset, right, by bank transfer. So your bank is credited, was omitted. So was omitted, just 1 minute, was omitted from the books. Actually, you were to make entry of machine debit by 5,000 and 5,000 you bank was to be credited. You omitted this. You did not recorded this entry. You did not record it, right? So you did not recorded the non-current assets, and also you did not reduce your current asset bank, right? So this you missed out. The purchase of a motor vehicle 15,000. Again, this is non-current asset. Vehicle is non-current asset. 15,000 was entered in the, so you purchased it, right? And you entered in the vehicle repair account. Error of principle. So what you made, you did entry of vehicle repair expense. How much? 15,000. And you recorded, and the purchase, it is not mentioned cash or credit or whatever. So either you paid it by cash, or you paid it by bank, or either you paid you buy on credit, you creditor. So this entry was made. So you recorded the credit side, second aspect correctly, but on the one aspect of vehicle, you were to record vehicle account. This is a capital expense, your non-current asset. You recorded that as an expense. So this is an error of principle. So you recorded this, but here you did not record the non-current asset. So what effect will correcting these errors? They are saying if you correct these errors, on correction, what will be the effect if you correct these errors on the non-current assets and working capital, and on, right? So you have to show non-current assets. What? So we know this 5,000 non-current asset was missed. So if you will correct it, then you will record this 5,000. And here again, what you have done, you did not recorded the 15,000. Instead, you recorded as an expense. So you did not record it as a non-current asset. So you will record this 15,000. So ultimately, when you will do correction, when you will make correction, so 5,000 you will record as non-current asset. You will record as non-current asset. It means 20,000 of non-current assets you will record. So the question they are asking, what will be the impact on non-current assets? So we know non-current asset will increase, and what will be the working capital? So non-current asset will increase by 20,000. So non-current asset increase, so this is correct. Non-current asset increase, this is correct. But in 15,000 incorrect, 15,000 incorrect. That is why this whole option is incorrect. So we have two options, C and D, and we have to select which one is correct, C correct or D correct, because net asset 20,000 is correctly mentioned in both the options C and D. Now what second aspect, we have to see the working capital. Actually what we have done, we did not recorded bank. So it means we did not reduce our bank, means we did not reduce our current assets. So current assets minus current liabilities are is your working capital. So it means you did not reduce your current assets, it means you did not reduce your working capital. So when you will record this transaction, right? So what will be the impact? Your bank will reduced. Your bank will reduce. It means your current asset will reduce, and your working capital will get reduced. So this option means your working capital will reduce. So not effect is not clear. So the correct answer is C. Right? So your correct answer is C. Move on to question number 9. So let's move on to question number 9. Question number 9 says, why is a sales ledger control account usually prepared by a different member of staff than the person who maintains the sales ledger? Sales ledger is what? This is subsidiary ledger, or what we do here, we customers individual accounts we maintain. We maintain customers individual account, and this is maintained by a separate person, and he maintain all the customers individuals account, right? But in general ledger, some other person maintains because this is a individual customers account, or you can say this is the accounts receivable of individual people's how much account is receivable. This is maintained in subsidiary ledger. But in general ledger, what we do, we maintain one account, which is called accounts receivable control account. This is maintained just 1 minute. This is maintained in general ledger, this one. So why? And all the information from books of prime entries total are recorded here, and book of prime entries individual info is recorded here. So this is with a view to control any fraud, right? So the main purpose is to control or detect the fraud. So locate error could be this is also one of the reason, but this is not a main reason. To provide an instant total of trade receivables, yes, it do, but sometimes it is not matching with the individual subsidiary ledgers. So, but it is not the purpose. It is a part, but it is not a purpose. To speed production of financial statement, yes, it is, because when your control account is there, it helps you, as I explained you earlier, that from general ledger you take information to the trial balance, and from trial balance you take information to prepare your financial statement. So it do help, but it is not the main purpose. The main purpose is this A, because through this through control account you avoid the fraud. So the person who is maintaining a subsidiary ledger, he cannot do any fraudulent activity. So answer is A. Come to D. Question number 10. What would be recorded on the credit side of the sales ledger control account? What is sales ledger control account? Again, it is accounts receivable control account, right? And this is maintained for total cash refunded to credit customers. So you cash credit to, so what would be recorded on the credit side? So cash refunded to credit customers. So this is okay. Then credit says, okay, So what would be recorded on the credit side? So if you are refunding some cash to credit customer, so what entry you make? Customer you debit, if I am saying 1000 and you credit 1000 your cash. So this does not appear on this, on the what you have to, what is requirement, what would be recorded on the credit side. So this is recorded on debit side, right? So this is not your answer. Credit says, what entry is made for credit says? Account receivable control account, you debit with any amount 1000, this is arbitrary amount, and you credit the sales account again. So here when we record the credit says account receivable control account gets debited, and we have to find out what is credited. So this is also not applicable, incorrect. Interest charged on overdue accounts. So what you entry is made when you, some amount of interest you have to receive and you have charged on your customer. So you, what you do, you, your customer, you debit. If I am saying 1000, then you interest income will be credited. So customer account is debited. So again, on this side, this will be appearing in the account receivable control account. This will be a entry will be debit as a debit on the debit side, not credit side. So this is also not. Sales return. When sales return is done, what is the sales return? Then you, sales return is debited. If I'm saying say 1000, so, and you credit the customer account or account receivable control account. So this entry will come here 1000 due to sales return 1000. So only this is your answer, D. So move on to question number 11. Move on to question number 11. Question 11. Maria's draft income statement for the year ended 31st March showed a profit of 38,750. Fine. On 31st December, so okay. So this is their year end. This is year end. Here they prepare their financial statements. On 31st December 2021, Maria received a bank loan. When? On 31st of December. She received a bank loan, 5% she has to pay. So how much would be the tag interest? 4,800 into 5%. So the total amount of will be, so annually she has to pay 240 per annum. She will be paying per annum, but she got this on 31st of December 2021 she got it on December. So how many months? 3 from December till March to 2022. How many months? 3 months. If we can work this out, interest, so interest expense for 3 months would be 240 by 12 into 3. This will be 240 by 12 into 3 months, 60. So this will be the expense which she should have charged, but which was incorrectly treated as a revenue receipts. She did not, actually what happened, she was to make entry that this amount she has got from bank 4,800, this was to be debited, and 4,800 loan payable was to be credited. This was the correct, she was to do it correctly, but wrongly what she done wrongly, she recorded bank correctly 4,800, but 4,800 she did not treat as loan. Wrongly she treated as a revenue receipt, means income, right? Treated as a revenue in error whole. And another thing, in error, a whole year's interest on bank was included in the draft income statement. Okay, so in calculating this, he made mistake. He was to take this 60 as a interest expense, and he took 240, and he deducted the 240 expenses, but he was to deduct only 60. So what mistake he has done? Number one, he has charged extra interest expense. Number two, he recorded sales and revenue 48,000 while it was not the sales or revenue. So this 48,000 has increased the profit. On the other side, 240 has decreased the profit. So now we have to correct it. So what was the correct profit? The correct profit, so draft profit is 38,750. So you recorded, you might wrongly recorded sales or revenue, whatever, is how much? 4,800 you recorded as revenue. So you wrongly recorded, so you should deduct it. And interest, extra charge of interest. Interest extra charged. How much you were to charge? You charged 240. You were to charge only 60. How much extra you have charged? 180. So you have deducted, now you added, right? Because you were to record 60, you recorded 240. How much you extra recorded? This much. So you deduct to add this back. So how much this will be? 38,750 plus 180, and then minus 4,800. So this is 34,130. This is your corrected profit. Correct profit. So for 34. So option B will be your answer. Okay guys, thank you very much. That's all for today. So if you have any doubt, any clarification, or so you can write to us, and we will try to get back to you quickly. Thank you very much, and bye for now.